Hi guys, welcome to earnings season. I am at RT Rowe, Randy Rowe.
And I'm at Danhai, Danhai Hall.
There we go, and this is earnings season, the show you know and love. This week, Danhai and I are talking about 2019, the year that was.
What a great year it was.
Yeah, as you hear him talking happy, you know, this is the year that Danhai figured out that a paycheck wasn't the only way. Although big up to the people that give you a paycheck.
Yeah, I'm right.
Yeah, big up them.
time.
Yeah, always big up. You know what? I don't want to say any name. I want to be the big up Mayberry. I didn't want to big them up first because I didn't know how the space is. But I guess so. This episode, guys, we'll be talking very personally about all sorts of crap. Of course, the market, feelings, everything, blah blah blah. But how we see it. I guess that's one point. That little stutter there. I guess we won't be editing it out because that little stutter there is me going one thing. So I have this show. Show launch is here. Hey, great year for us. And one of the very first things I worried about was sponsorship. If I ever chose to take on sponsorship, you know how it go in Jamaica. If you
Everybody likes
exclusivity,
competition.
Yeah. Generally, people don't like competing much or at all in Jamaica. We're very one and done in Jamaica, meaning from one person start doing a party company, or anybody else a second party company and following. I don't believe in that, but also our corporate bodies have been very. In the past, I've been very, I want to say exclusive. I'm trying to find a nice way to say exclusive, but with the Jamaican spin, which I'm pretty much just saying that, yo, you work for Digicel, you can't work for Lime. Of course, we saw that breakdown because lots of people do the two. Where you do ad for one, you can't do ad for that. And I understand certain exclusivities. And I wonder about the show because I deliberately did not want the show to be aligned to any one person. So even just now, I stopped not saying Mayberry because I was I don't want the first big up to be Mayberry because people think that one, I work at Mayberry, or two, I have something to do with Mayberry or something really. Other than being an occasional shareholder of Mayberry. I don't really have much other links to them. Yeah. I'm a client and I'm a shareholder.
I guess because we talk so
well
highly of them.
Yeah, that's true.
It's funny because I was speaking like this about Mayberry before I went there. So I had a friend, big up Leo. Leo, he was the equity trader at the time at VM when I was there. And when I told him that I was going to Mayberry, he said, "Oh yeah, man, because I think I should have seen that one coming because the way you speak about them, I know you like how they do business. So it's from that time, a guy I speak about the stock market and equity a lot with. He was saying, I see you at Mayberry because of how well you speak, how highly you speak of them. So it's not that I work at Mayberry. I've been speaking about Mayberry like that from before I've been at Mayberry.
Yeah.
So moving there kind of makes sense. You like how they work from outside, so going there just makes sense. Yeah,
I'm with you on that. Funny enough, I've been talking more about them before I had an account with them. Before I could afford to have an account with them.
Definitely for me.
Yeah, class is class. You can't hate on it. You can't. I mean, when people are on top, they're on top. Everybody else get overshadowed. So
funny enough, when I just got there, I was just shy of account opening numbers for Mayberry. So
that top million. For the people listening that don't know, to open a Mayberry account, you need $1 million Jamaican dollars to qualify.
So I was just shy of it. So I got in because guess what? I work there. So employees at Mayberry get to open an account without the minimum requirement. So I got in not because I had $1 million, but because I work there. So I never had an account, but I was speaking highly of their product because you hear talk about it all the time, the margin product. Mayberry's margin is top class. So it allows you a lot of things. So a lot of freedom in using your money. I don't like the margin. It's the best margin facility in my opinion.
I have to agree with you on that. Of course, people want us to explain that. I don't know if maybe have another episode where we talk about margins. But in general, you guys can look that one up, guys. What the margin is, and we think Mayberry's own is the best. I'm throwing some tidbits as I start. Gems, this was the year that we started the Gems business.
It's funny, we have a friend who call her Gem because of how well she
puts together her research and her points. Yeah, she's so good.
Yeah.
And look how it just continued to work.
To the podcast.
To the podcast. So first gem I'll throw in there, which is like a deliberate gem, is circumvent. I don't know if I should say that, I feel wary about that sometimes. But it's the truth, so I want people to get it. Talking about how to get the Mayberry account before you have the $1 million. But I've said it, I've tweeted it, I've written about it. Any company any brokerage house that is the lead broker for an IPO. So you guys said those things. I'm sure I've said this on the podcast before, but I'll say it again because sometimes people DM me and ask me anyway. Any company that is that's the lead broker for an IPO, if you apply for the IPO but do not put in any other brokerage account information, that lead broker has to open an account at the brokerage house for you.
You know what side? I didn't see it that way. Before I did, but for Mayberry specifically, they're not accepting of it because the account minimum is waived. You can just go and open an account, and you open an account for the IPO.
You mean generally?
Yeah. So,
you mean during an IPO time?
During an IPO, Mayberry allows you to open an account with them. When I went there, it never felt like.
Oh, you were circumventing anything?
Yeah, just we waive the $1 million. You come open an account. So we want get as much people inside the IPO as possible. So waive it and you're good.
Yeah, and you see that's another reason why I have to rate them because they are them adapt to the market. Because when I did it, it wasn't just waived, you know.
Oh, it does.
Yeah, in my day it was very much. Sorry, you need $1 million. I have $1 million, but I read the prospectus and I know that you guys have to give me a brokerage account if I don't specify one, and I don't have to specify one because all prospectuses are always to the overall public, and lots of people don't have accounts. So it's a great way to get one. Yeah.
So they learn the market and they adapt it. That's good. That's good business.
Yeah. Any company that can adapt is a company that is definitely on top. And so I rate them for that. So yeah, that's your first tip, guys. If you ever want to get a Mayberry account, and we think that's one of the best, you call them the best brokerage house. I deliberately didn't turn this into like an award ceremony. I could turn it into an award ceremony. If it was, I'd edge them out for that. I'd call them the best brokerage house in Jamaica. Yeah. I would, but I'm biased.
I am biased.
Yeah. Well, I shouldn't say I'm biased. I'm not biased because I don't have any.
It's not really.
But I should say I'm not being empirical because I have not used every single brokerage house in it. Yeah. I've never used GK Cap.
Same.
But I know the VP at GK Cap. One of the VPs at GK Cap is a star, right? Yeah, big up man, like 5 Solely.
5 Solely, mandatory.
Who gave us an amazing episode this year too.
Definitely.
Yeah, a few amazing episodes.
And man, every time Ryan was on, delivered value every time.
Every single time, which is why he's good at doing. Yeah. Big him up for that.
I'm sure his clients know that.
Yeah, I am sure his clients know that he delivers value, boy. Yeah,
he spoke a bit Wow, that English there. Yeah. That was a math student, guys.
That's our Rome episode.
Yeah, he spoke a bit candidly about what he does for his clients and how well he does for them. So people who listen to that last episode, they really understand that Ryan's clients know that Ryan is delivering value for them.
Yeah. And I don't know. So that episode got a whole heap of editing.
Edited heavy.
A whole heap of chopping of almost roughly 2 hours.
Yeah.
Sir Bam. Big up Bam Production Studios. About how much we chopped out of that episode?
It closed at around 4.5 hours.
It was like 2.3. Oh, wow. So yeah, almost 2 hours of content chopped out. Because we just had to. That rum. One of the things that we did chop out was that we needed me saying, we need a rum sponsor. So big up anybody who wants a link. It's not just for rum sponsorship, but we're regular human beings. So right now I'm drinking coffee. Danhai is drinking water. And Bam is drinking soda. So feel free to reach out.
We're touching the market from all angles.
There we go. Feel free to reach out. earnings@everymickle.com.
Funny story about that rum sponsor. My introduction to the market had a lot to do with rum.
Yes.
So anybody listening, the group you hear us speak about sometimes.
The group you hear Danhai speak about all the time. Who is the person that you need to link if you want to be in that group?
Yeah. So one of the rules to being in the group is whenever we have a link up, you make sure you bring legal aged rum. And before that, I wouldn't call myself
Scotch.
Or Scotch, yeah. But I wouldn't call myself a rum drinker or a heavy rum guy, or whatever you want to call it, heavy drinker. So when
alcoholic is a term.
Alcoholic, yes. So when they said legal age liquor, I was like, what are they talking about?
Yeah.
When I talk legal age, no. Legal is a legal age for you. So I searching legal age liquor online.
Oh my God, you put that in your Google?
Yeah, and it tells me that Scotch has to be aged a certain process for it to be called Scotch and all that. So I was like, that's what I'm talking about. Then I found out, no, legal, like over 18 years.
Literally.
Like you're an adult.
which is a good like a microcosm of the market, right? Oftentimes it sounds so complicated, so you got to do a whole heap of research because you think it's deep. But no, it's exactly what we're saying. It's just legal. It just means we just want 18-year-old scotch. That's it, or older.
So I remember going to PriceSmart, and the first was me, Alex, and Chad were joining us. Me and Chad were joining at the same time, and we were big wondering how doing this now, whatever. Going to PriceSmart, and we found some 21. I put on 21 years. That's the first time I had that one. So I go to link up. I put on 21 year. Big up Dimitri. Who made me drink that.
That's good. Well, that's a good introduction to rum. Yo, Jamaicans don't know what we have in that, you know.
Oh yeah, man. So it's actually objectively better than any other rum younger than it.
Wow. Thank you for ensuring that our sponsorship rum options are now just one. I'm not going to lie with you though. I love the Appleton, but I also I'm also
like that. I mean, like if you're drinking regular rum versus 5-year rum, 5-year will be better. Then 12 years better than that, and then the 20.
Oh yeah, the older the rum,
it actually tastes better. Before when I drink regular rum, before I got a seasoned palate, I pick up. Put in rum. If it's not mixed, then boy, it's just a burning sensation. I wasn't tasting anything. It was cool. I was down in this so I can get the buzz.
You're drinking for drinking sake.
Drinking for drinking sake. Cool. I want to feel this way in this party.
Okay.
And then I actually know how that liquor has a taste, and that was my introduction to liquor having a taste.
Yeah, and it only gets deeper from here. That's like that's a Jamaican rum calendar. You start from liquor. You start from mommy or daddy making you taste a bit when you're much too young for it, to being old and thinking, oh, liquor tastes bad.
Yeah.
To going through enough of life troubles to go, let me have some of that taste bad.
I don't know what I want. This is more life troubles.
I do. And then of course going into, okay, let me see what these guys hyping over. It don't make sense. Right? Yeah. And then realizing, there is flavor. There's
actually flavor.
Yeah. And bring it back to the market is the same exact thing that a lot of people are going to see. So it's hype. A lot of noise. Oh, let me do this thing. Oh no, it's hard. I can't do it. I hate maths.
And then I'm making some money.
Let me see what's actually going on here. And then you get into it, and before you know it, your taste develop, and you start being more mature about how you're
picking in your specific way. You know what you like in companies. Know
exactly
how you make money best here.
Exactly. So it's not just because everybody drinking. I don't want to call it. So everybody drinking hard liquor, but you like beer. Stick with the beer if it works for you. Exactly. Yeah, man, because maybe that's what works best for you. Maybe you are like, yo, I have like a stomach problem, so I can't bother with no creams or anything like that. So I might just drink some white rum and water. And somebody's like, white rum and water, you're alcoholic. But you're like, yo, you're not the one drinking it. I am. I think for my life, it's literally just like investing.
That's my clutch now, white rum and water.
Yeah. Oh, God, the man jumped all the way to the end. The white rum and water is the truth.
It is the truth.
White rum and water is the truth. Squeeze a lime. Yeah. Sometimes.
Hard lemonade.
Sometimes big up with Cinco. Sometimes I have a little bit of white rum and Schweppes. And hi guys, welcome to the Liquor Podcast. Jamaican drink champs. But yeah, sometimes I have like a little bit of white rum. I call it soda water because I'm old. Bitters. I like bitters in my drinks. So I'll have soda water, white rum, a little bit of bitters, squeeze a lime. Yeah, I'm good all night. I don't need to drink heavily. I used to drink a lot heavier when I was younger. And that was dumb, which is why all my old pictures have me looking really fat. And then once I stopped doing that, I started being a little bit healthier, taking care of myself. Yeah, come on, but you can still drink. And funny enough, your money lasts longer because you don't drink as much and you get
I only drink socially, so
yeah.
I plan to keep it that way.
That works. Yo, again, everybody on their own journey.
Exactly.
Yeah. So that was the Liquor Podcast, guys. Thank you for listening. Let me bring back to the market. So this year, we're doing a nice review of 2019, Q1. Q1. Highlights for you.
Highlights. So at that time, my money wasn't. So that Q1 was what put me into a good amount of money.
Strong. I like that talk.
Yeah, man. So I started the year I was coming out of, so first year, let me give you the history of my investing. This is my third year actually investing. I started in February 2017. Mistakes, but pulled together. So all my money together made me 127%.
Word.
Yeah. So I'm glad I started how I started. I had a bad start. Lose money, but it was a small amount of money. So eventually I pick penny pinching, saving out about the money, put in the market, see where a good opportunity was, and I put the money there and return me a good amount for the year. So 127%. Next year we're making a lot of money off because I think we went into 2018 with the whole Mayberry news about Mayberry MJE, and we rinsed that a couple times. So
2018 or 2019?
2018, man. 2018 had us with Mayberry.
Oh, yeah. No, I'm with you.
MJE.
Okay, you're giving context. Go.
Context.
Cool.
So 2018, we had the Mayberry MJE. We made money on Mayberry, then we made on MIL, then we made money on MJE, then we made money on MIL all over again.
Money MJ, yeah. That's why those guys like it.
Yeah, man. And coming out of that, my returns were high, like in the 3 digits, triple digits. And then I switched jobs, got a much larger paycheck, and I started putting that paycheck into the market. And my triple digit returns on my money, it just started looking different. So you put new money into in the account, so your actual returns on the total money you put in drop. Yeah, the percentage stopped looking as nice. Nice money putting in. I was like, oh, wait there. So I ended that year with 69%. So most of my money was made at the bulk of the year. Most of my returns were made at the start of the year. Got the job halfway through the year. So the last part of the year, I wasn't making as much. I did make good money then, but pulled me down to 69% because I put so much. So ended the year with 69%. So I was like, yo, I made good money, but I need to actually make good money this coming year. Then we hit up on Carib Cement. Yeah, we already were talking. So Carib Cement had a rough time before that because of they were paying about $1 billion plus to because of the lease.
The kiln 5.
They were leasing the kiln from their owners, TT.
Yes.
Yeah, man. So they were leasing the kiln and they had a restructuring of it during 2018 where they said, all right, we buy the kiln, but we're going to finance it. They're going to get some financing deal with the owners and sort it out and we pay off some preference shares. So most of the money that was coming to them was being pushed towards financing and paying off the preference shares. So we had looked at that where we said, all right, so Carib Cement, they fixed the kiln, but we know that even though, so I think the price had gone up, people were really happy about the kiln, but we had spoken about it and we were saying, even though the kiln gone in or whatever, they still have to pay for it. So the more your money goes, it's not going to be there.
Exactly.
But then we started seeing other stuff where they started pulling more revenue. Revenue shot up that year. It was
as the construction boom really got going.
Yeah, and it's funny because we had a lot of talks about, so the analysts were putting out a lot of talks on, the construction boom. And they were like, the construction boom, look more revenue going to go up, but the expenses are going up with it. So they still have to be paying off too much.
And then they started doing, I don't know if you're not there yet, the manpower.
Yeah, the manpower restructuring. So a lot of that was. But then we started seeing where they started looking towards fixing up their expenses. So revenue go up, expenses go up. So we know the real value is, okay, so the construction boom is happening. On top of this boom, so more revenue coming in is not going to happen just off what they have now. They either have to expand and get more storage or more producing more, or they fix the expenses and tailor the bottom line. And we started seeing that where they went off and they restructured a part of the financing into Jamaican dollars because they were taking heavy hits on the FX change.
Yep.
They had an efficiency push where they started selling the actual cement in an easier way for them to actually not lose money during the selling. Yep. And that was part of the manpower restructuring. I
think so. And it worked so well that the local market was pulling so much that they stopped exporting.
Yes, they started to stop exporting. But it's funny because soon go on that for Carib Cement. But yeah, they had a lot of money coming to the bottom line and they were like, hey, it's time. And we pushed a lot of money into Carib Cement. I remember even one morning when the results came out on the site, but it wasn't on JC as yet. And we were fighting in the market that morning because we were trying to get the shares. The price was rising. We had more money left and we fight. And somebody just kept beating us on the shares over and over.
One of them small.
And the price was fine. We had a good money. Had a lot of money in there already.
Yeah.
But you feel you have some money on the account and you say, yo, I really want this to go in and do something. And it wasn't working. I was just frustrated. But I was frustrated on one side because, boy, this money not moving. But on the other side, I was making a lot of money.
Yeah. So, and a lesson in that same time that I learned was just the value of money. It's something funny to say. I keep learning that lesson. I hope I keep learning it until the day I die. But it's money sitting though nice. Yeah, man, it don't make sense. Fat bank account is money sitting wasting. Yeah. Now I live very lean because any dollar that's just sitting there not doing anything is being wasted.
You have to go work.
Yeah, exactly. And then that's when I started falling in love with the lower percentages. Knowing when to pay attention to my percentage gain versus when to pay attention to my dollar gain. Yeah.
I remember we were speaking. We have shared something, and there's something that a lot of people within the space like to say. Cash is a position. It's used as a way to say, okay, so you have money in cash, most of the portfolio is losing, but that position is not losing, right? But for me, it's also a reminder of this money sitting here is doing nothing. So when I have X amount on my account, and say one day I have money in carry cement and carry cement is moving, then the money I don't have in carry cement isn't moving. It's not doing anything for me. So cash is a position. Use it. Try to use it on both sides. I hate the use of it as, oh, you're not losing money on that, so it's fine. You're not getting anything out of it either. So you're at the same place you were yesterday if you don't spend that money. So
with a nice looking bank balance and no point to
the
it.
most comfortable point is when I look on my screen, there's no money to spend and I have no more opportunities that I want to go into heavily right now. That's comfort for me. I go in, look at it, check the market, and then I can do something else because I know that X was planned already, money is there, and I'm good. Kind of get shaky when something come out that day and like, John, I need to be in that.
Yeah.
Then,
but then that's when margin started coming, right? That's
definitely
the most requested thing I get all the time. How to invest with a margin. That's a DMs people ask me all the time. How to invest with margins. And again, it's weird. So guys, so the hardcore will listen to this all the time. The people who press us all the time if it's late. Yo, where's the podcast? Big up you guys. But they should know, they especially know by now that we don't always spell out that, hey guys, this is how you do X. We say it, but we don't tag it as that.
Exactly.
Yeah, even the show notes, sometimes I don't say it. So I guess I can just straight up say it for this episode.
Yeah.
That's one of the reasons why Mayberry's margin is so good. That's one of the great advantages of our margin. You don't have to choose. You can get both.
Exactly.
Yeah.
Choices are for poor people.
I'm not repeating that. But it's true.
So yeah, definitely.
Choices are for poor people. You know, I've said that.
You don't get rich doing things that poor people do.
That's a fact.
You get rich you move forward. You think of, a rich man is doing this. What's the best way for me to do it right now?
You see that last part? What's the best way for me to do it? That's the thing that people don't get. Because, so this was the year of Buffett in Jamaica, where everybody talk about what Warren Buffett said.
Yeah.
And Warren Buffett is not wrong with many of the things that he says. Yeah, few people like...
If they know us, then they know we talk about that guy heavily.
If they actually know us and actually know what we talk, they know that we rate Buffett highly. But we rate the real Buffett, not the repeat YMCA Buffett. We rate the Buffett that say, don't listen to guys like me.
Yeah.
Which is funny because that's what we said to him. Right? No, except for this is just an earning season. But this is the year of understanding that it's not that you shouldn't listen to what Buffett says.
Put
but
in
you
context. If he's speaking at a level where he's talking about billions of US dollars, and how to best go into that, and you have $1 million Jamaican, then you're not talking Buffett level.
$1 million Jamaican would have bad and not so bad.
Definitely.
Yeah, man.
He's
50 grand guys.
50 grand, exactly. It don't make sense.
Yeah, 50 grand. You can't follow Buffett with 50 billion.
Definitely.
Buffett can buy something now and say, oh, I'm holding this for 10 years. Of course you are. Yeah. You bought 80% of it. Of course you're going to hold it for 10 years.
Exactly.
Buffett, you're not even going to be alive 10 years from now, not wishing death on anybody. But I mean, it's Buffett. Of course, I'm going to buy it that way. You have big money, you're moving a certain way. You have small money, you can't move in the same way. Yeah. This is the year I told people, you can't have Tanto Black's money and acting like Buffett. And there are also people on the flip side who have told you can't have Buffett level money and acting like Tanto Black's. Yeah. If you have invested millions, stop talking to me about every IPO and which IPO this and that. Stop doing the jumping around. Stop with the crap. Get into it for real.
Yeah.
Act like you know. Act like you have big money and you're getting there. And if your advisor not giving you big money advice, it's good.
Change
but
advisor.
The hard thing to do is knowing your middle level, knowing your medium level for where your money is. So there is a little funny thing that happens where you can't do the 100 grand tactics anymore, but you also can't do the 10 mil tactics anymore. Yeah, you can't do the 10 mil tactics anymore. You have to know that like a middle ground. If I applied for yourself, we spell it out on an episode where we spoke about Jeeps. And I've had conversations since that one where people don't get that I gave them the formula there for how to buy almost anything. It's not Jeeps, guys. It's not Jeeps, yeah? We have our conversations about Jeeps. Otherwise, it's not Jeeps. Yeah. It's how to buy anything that you want. It's literally, if you have the money, and this works at any level, but people don't get it, which is one of the reasons, again, ding, 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 while the rate Mayberry. You have the money, you want to buy anything, whatever the thing costs. You have 50 grand. Let me carry it to the 50 grand people. Let me carry it to the 10 grand people. You have 50 grand, and you're at a broker that offers a nice margin. So, of course, we talk about Mayberry all the time.
Yeah.
And if you're listening now and your question is, but I do have 50 grand and you said that Mayberry is $1 million, it means you didn't listen to the first 5 minutes of this podcast because we literally spelled it out. But if it's not Mayberry and it's not Mayberry and it's instead Burrito offers a nice margin, I gather too. Yeah, I hear. I'm not a client myself, but I know I hear they offer a nice margin. Yeah. So let's say you're at Burrito, you have 50 grand and your 50 grand is in NCB stocks, but this new IPO come out. So I can sell some of my NCB. And no. First, you need to be sure what you're doing. You need to be sure your goal. You need to know what it is that you're going for. Assume that all of those things all the ducks are in a row there. You decide I want this. Let's say it was pre-mail pack. You only have $50,000 and it's in NCB shares, and that's what you buy every month. Every month you put a little money into NCB shares. And mail pack coming out and you think it's going to be good. You want to sell your NCB shares. Absolutely not. Borrow against the NCB shares and put the money in mail pack.
Yeah. Especially if the mail pack is a shorter term play for you.
If it is, right?
So,
but even if it's a longer
term play.
Well, finish your point and I'll say it about it.
If it's a shorter term play for you, you make your money on mail pack, you leave, and you can put your money back on the NCB. You made money, so you pay back the margin. And the excess is the profit you make. You put that in NCB, you look at more NCB for free.
Simple. This year, a lot of people are going to the threads explaining that. And I'm going to be pissed because we've been saying it for 2 or 3 years now.
Yeah, for years.
Yeah. So that was a nice short-term play. But let's say somebody's in it for the long term, but they also want to get some of the mail pack, but them also not really looking to sell anything right now. Longer-term play, which is also good. Two, you can't have your cake and eat it. You need to sort out what you want, but that's perfectly fine. You then need to just know that you have to cover the cost of the margin. So let's say you have your 50 grand NCB. I use Mayberry in this case, where they give a 40% margin on what you're holding. So you'd have 40% of the 50 grand. So that would be what? 20 grand? 20 grand. So you put 20 grand in mail pack. 20 grand in mail pack would have gotten you 20,000 shares? I don't remember. Or was it 2,000?
I think it's 20, you know.
It's 20? So you would have gotten the minimum?
Yes, I think I remember Lumbo was a 2,000.
Lumbo was 2,009%. Mail pack was 24%.
Yeah.
Okay, so you'd have gotten your 20,000 shares in mail pack. Boom. You'd have gone up 100% off borrowed money.
Yeah.
So the money that you borrowed would have just doubled. So if you're in it for the short, you can sell and you now have, you can sell half and cover your margin plus whatever the margin fees, which I think is 1% a month.
1% per month, yeah.
So you would have made 100% and it would have cost you 1%. So we're going to go 99%. And of course, I'm ignoring fees here, but I'll ignore fees for simplicity.
At the end of the day, you made good money.
So in other words, no, your NCB shares, which you did not sell, have now bought you mail pack shares with money that you did not have. So now your 50 grand is now 70 grand and you still don't owe nobody nothing.
Yeah.
And you did it all in a month. There's a gem for you.
And the margin can cover like money so you have money coming next week. Your pay is coming next week. And you have a buy now.
Yes.
Use the margin and just pay it off with the paycheck money.
There we go. If you want to go longer term, like I said, I give longer term tips. Is just work out what the cost of that 1% is and just pay it over time like a regular loan. Yeah. In fact,
you can even pay down the margin fully. You can pay down a piece of the margin every month to the point where you own the shares fully without having a lien against them.
Perfect. Yeah.
So,
third tip, the gem's going hard and fast. Third tip, you can go ultra. Let's say you really believed in it, and for whatever reason you had 50 grand worth of mail pack before, And so pretend world here. So you have 50 grand worth of meal pack before you borrowed against it. You can get the 40% margin loan. So it'll be 20 grand. Put that in meal pack.
Yeah,
so now
we've done that before.
Yeah, don't tell the people our business. But yeah, but yeah, literally that's it. That's how you act like Buffett, but at your level. And that's with 50 grand Jamaican. And it also works at the 50 grand level if you have to go hard, because that's part of what I did to grow from my 10 grand level. But it works like hell at the big level. If you have big money, if you have more than $1 million Jamaican dollars, you shouldn't be trying to do this IPO game unless your life is stressful.
Yeah, and I've said it before, the real money, it's not really made in the IPO thing. And if you can get all your money into an IPO, then fine.
But if you can't,
when the IPO stops, and you have the share to double, and you sit for 3 months and the money not doing anything for you until the next IPO, you don't know when the next IPO coming around. Because an IPO announcement isn't necessarily an IPO is tomorrow.
That's true.
It's just, boy, them say they plan to IPO, and now I sit down with my thumbs.
People have been asking us our opinion on Trans Jamaica for about half a year.
Yeah. It's funny.
Yeah. People telling me, say them put on the money for Trans Jamaica from June.
Yeah.
Like, what?
Say, oh, you have information I don't have? But it's coming out tomorrow.
Yeah, why do you put it on from June? We know. I mean, you'd have seen half a year go by and your money just catches a position.
Catches a position.
Catches a wasted position.
Yeah.
That's what it is. Money only has one use, to be invested or to be spent. I like that. I interrupted you. Where were you in Q1?
Oh, Q1. So Q1 for me was the main highlight was Carib Cement. I made a lot of money at that time. I think that's when I started my tweets about, I beating my thing there,
Your paycheck.
My paycheck.
Yeah, this year. You made more money from investing than you did on your paycheck.
Paycheck.
Yeah.
Even after the raise. Nice. That sounds really good.
That does sound really good. And that's something that's doable this year. This year when everybody discovered the stock market and decided that it was, if you just discovered it, chances are you think it's like lotto with better odds. And if you've been in it before, or you're a professional you work within the industry, you think that anybody who's talking about it like that or talking about making those aggressive gains that we make are
playing lotto.
Playing lotto, yeah. You think that we're playing lotto and we're new to it and you don't understand what's going to happen. Yeah. This is the year I wasted too much of my energy arguing with people on Twitter about things like that I shouldn't have. Yep. Yeah, that's one of the regrets I have this year. I gave too many people energy that they shouldn't have gotten it. And I'm making up for that by wiping my tears with my gains. It was a year of the IPO though. Q1 for me, I mean, yeah, Danhai mentioned part of the play with Carib Cement that I know was pretty nice for me. I made some money on that. MJE, did Mayberry have any big listings at the start of the year? Or
start of the year?
Q1. Not even just Q1. Mayberry. What were the IPOs in Q1?
IPOs in Q1. I know. Weekton was Q2, I think.
Weekton was Q2. And Weekton obviously is like a major part of the
definitely.
year. Yeah. What happened there almost happens nowhere else. But Q1 was nice for me. I think Q1 was when I started to say to myself that, okay, let me see how truly serious I can take this thing. Yeah, because I realized that, like I started looking back and going, I've been doing it for a while. I've been doing it well. But let me start. It was me telling myself. There's a lot of things that people don't know. I think people think that Fontana did come out. When did Fontana come out?
I was in Q1. I know. I said the shares. I was buying shares in Q1.
You're buying Fontana in Q1. Fontana in time there was like $3 or $4.
$3 or $4. Yeah.
Yeah. It was a nice thing then, and it went all the way up to 8 something.
But I never had it for that ride. Got in the IPO.
You bought that IPO?
Bought IPO, yeah.
$8, yeah.
And I remember what happened with people got good allocations who didn't split it up, the split up thing.
Yeah.
People who split it up, they got cut off. Split up, you have 5 accounts and you apply from all of those. You split your money across the accounts and you apply one IPO with all those accounts, hoping to get the minimum plus the percentage pro rata on all those accounts. Fontana said, we're only taking 1 account per person or entity. And
Fontana chose to, I think, I could be wrong, but I think they actually checked everybody's TRN.
Yeah, to me, I think that's the only way you can actually, because you can see the JCSE numbers, you can take all of them, but you can see whose TRN is tied to each JCSE number.
And you can simplify, Tip again for the people. So now tip. A lot of people think that the strategy is so obvious now when you see it because so many people follow along this line, so you know that's how they get there. One of the first things people think is, oh wait, I get a low allocation, so here am I do. I open multiple brokerage accounts. I know this because people DM me every day asking me if you can have more than one brokerage account. Here's your question answered. Yes, you can have as many brokerage accounts as bank accounts. That's the answer, right? So if you can have one at every broker, you can have multiple at every broker. So the thing that people come up with is, I'm going to apply from every broker so I can get a bigger base allocation. That way I get it. And it sounds good, but that's a Tanto tactic. Nothing wrong with Tanto tactics at Tanto level. Yeah, but if you're working with Buffett Money or large, and it doesn't have to be Buffett Money. If you're working with my personal view, anything over 500,000 Jamaican, you shouldn't be doing that. That's my personal view.
And you say there's a lot of hassle too.
Yeah, a lot of hassle. You're going on to 6, 7, 8, there are 12 brokers. You're going on to 12 brokers to do it. And the people who did that for Fontana, they only got one. And so I said that.
You got a 12th of your money.
Exactly.
Invested.
And you wasted all that energy and time. So, explanation that I started because I said Gem 2. Every brokerage account, and you can have as many as you want, comes with a JCSD number. So even if you have 3 at the same broker, you have 3 different JCSD numbers.
Yep.
Yeah. And every JCSD number is linked to a TRN. So all happened with Fontana was that they just check to see who had the same TRNs, and they put all of them together, which if you pay attention to our tweets or come
they put all them together, or did they just not accept? They chose which ones to accept. That's what they feel like to me.
Well,
they did not combine them.
They exercised their right as they gave in the prospectus to treat it as one or to reject as many as they wished. Yeah,
people are scrambling. It's like they can do that. They cannot take it.
Yes, they can.
They can. Almost every. I would say every IPO or every prospectus has that clause.
I have not seen one without it.
I have not. Yeah.
Yeah, but they don't. They choose. They pick and choose when to follow it. Which says to people, if you're going into this IPO thing, you need to know the rules. You need to read the prospectus, and you need to know that that's a possibility.
Yeah.
I do not do that multiple broker
I
thing.
do that one application.
Yeah, the multiple broker thing makes less sense, especially at this level.
That's a good allocation, and then I was just buying it. It started falling to around $3 around there.
Yeah.
There
was a lag.
It was a $4 stock.
Yeah.
Shot up and it started creeping around 3. I was just buying over and over and over at 3.
With the intention of selling when?
Selling at 4 and above. That's at least 25%.
Look at that. You're looking for 25%. In what time?
couple weeks.
Yeah. Oh God, short term.
And
you can't do that.
That's what happened.
Yeah.
25% got a lot of money. So moved out, everything cool.
Yep.
And then that thing happened, the moving from 4 plus to $8 sometime after. I was not in it for that, but I think that was pure speculation.
What do you think caused that?
That was a lot of hype around what the new location will do for Fontana.
I like to go a little bit deeper. So Q2, we'll jump into Q2. In Q2,
you know, you talk about your Q1.
my Q1 was good, but I don't remember it as clearly.
Yeah, so I went on JTrader. JTrader has a trail where you can check your trades at whatever period of time. So I was went back to the start of the year and checking my
Tell
trades.
the people what that is while I look it up.
JTrader. So JTrader, in the trade screen, you can check what trades you did at whatever time. So it saves all your trades, and you can go back and say, so I'm looking at it and I'm seeing trades from the 15th of January.
So you know exactly what you were looking
exactly
at.
What I was doing, yeah.
Perfect. So we're actually working with actuals here.
So I even made a little bit of money on AMG. It was a small quantity. I got some units.
AMG bounced around a little while,
because it had good results for the first in a while. We're not dealing with the problems that were on the books before.
The tissue factory. The tissue dropping, So, and so it was the first set of good results post tissue.
Yeah. So that came out. Got some money on it. Came out before it fell. So good on me. And
I think it's, so you say, you think it's on the rise. Rand said that. Rand did say that. That's one of his long holds.
Yeah.
I actually think I still have some AMG, you know. I was a little disappointed that I didn't see them attacking as aggressively when the plastic ban, because the plastic ban started our Q1, January 1, no more plastic bags. Remember the world was going to end? Oh my God. Every year, every quarter, our world is supposed to end from something else. Every time the dollar break 138, our world going to end. Every time something else get banned, the world going to end. I tell you this. I sometimes think I miss plastic bags, but not really. I'm actually pissed at retailers now because they took the opportunity. They used to get plastic bags for free. Did they replace it with paper bags? No, they didn't. They have paper bags and everybody started selling it. And as a customer, I'm annoyed. But if I think about the environment, I'm actually happy because paper bags are still waste. Right?
And you find out if you need it or not.
Oftentimes, it's so funny. Oftentimes, I'll go to the supermarket, I'll get stuff, and there's no bag there. And it turns out I can carry a lot of things in my arms. And I'm paying $30 for the bag. And it's so dumb of me to that. But yeah, shit, I'm not doing it. I'm not doing it. I'm not paying $30. And it's so dumb of me, but that's good because it means I didn't spend $30 and I didn't throw that paper bag away. Because paper bag get thrown enough. Plastic bag used to get put under my sink. Paper bag get thrown enough.
Yep.
Yeah. Shout out to the people that use paper bags as garbage bags. Which is, I guess, dual purpose.
Yeah.
So I'm not knocking that. That's good. And I'm not going to lie, bro. The streets seem a little cleaner. I know it's too early to say.
My mother mentioned it to me. Like she said, she doesn't see plastic bags anymore about the place.
And you don't
but you see the other garbage though. So
yeah, it's still the other garbage.
it's just not with plastic bags in
Yeah,
there.
but it's less. Yeah. It's less. Sorry, guys, we're hearing the laugh in the background. We have a guest in studio who can't contain herself. Apparently, are you okay, ma'am? She also started investing this year.
Oh yes, she did.
And she's here. You want to tell people your investment story? You want to tell people who you are? Can I tell people who you are?
Sure.
So we got a visit from the layman's doctor who was not here to us. She's actually here to Martin. So you guys can put those two together in your mind. They're going to misunderstand when I say that. So let me be very clear. Bam, the podcast producer, is linking up with the layman's doctor. All right? Bam, who is in a relationship. Bam is in a relationship. Wow.
Damn.
Yo, when did I ask him if he's in a relationship and I could say it on the podcast? I said that to like episode 4 or 5.
Oh, yeah.
And the answer was yes then. I know we're at episode, I don't know which episode this is, I don't know when we drop it, but I know it's in the teens. Yeah, but I don't know if we're dropping this one next. But we're at the end of the year. But I'm free up. Damn. My condolences to all involved. So guys, back to stocks. Back to stocks. I like when stocks involve a lot of laughter. You see, I hope that's how people enjoy the market, to understand that it's something that it's fun. It doesn't have to be hard. It doesn't have to be technical. You don't have to twist up your face for it. It makes a whole heap of sense. So, having said all of that, I'm looking at my Q1 in JTrader. I want you to tell people what JTrader is, just because they stress me all the time asking.
Yeah, JTrader is JSC's trade platform. You can go and execute your trades there. You don't have to deal with a third party. You don't have to message your broker. You just take it into your own hands. If you want to buy or sell, you just go. Your JCSC numbers, you can have more. If you have more than one JCSC numbers, so more than one accounts, then you can just put them all into the one JTrader screen. You log in one time, and you can make all your trades from there.
Boom. Yeah.
Send your money to your broker, tell the money is there. They put the money on the system, and you can trade.
Yeah. Ouch. What was your first trade for the year?
First trade for the year.
Yeah. While you look that up, I'll tell the people. It's so funny. How serendipitous. My first trade of 2018 was a company called Jamaica. 2019, apologies. Was a company called Jamaica Stock Exchange. I bought a little bit of units, a few units for $10.77. Wow. At the start of 2019 is my first trade in January of 2019. $10.77. What's JC at right now?
Crazy. 30 something? Or is it 20 high?
I don't know. I'm checking also to make sure that people get some accurate numbers from us.
My first trade, I think it was Fontana. I was looking at it. It was the 14th of January. So I wasn't buying or selling anything at that point. I think I just sent the allocation to Fontana. I was waiting for it to come through.
Okay.
And then afterwards I had bought into
When was that IPO? It was in 2018?
I think it either came on the market at the end of the prospectus was posted at the end of 2018 or start of 2019. So yeah.
So you would have started the year looking for you're right, because Fontana's IPO was in December 2018. So you I get
invest
you.
the money, I was sitting and waiting.
Yeah.
I think I had no money to spend at that time.
Yeah, wow.
Or money the refund hit and I could just go on and do my thing then.
So okay, yeah, because that refund thing is a real thing for a lot of people. And it was a real thing for me back then. JSC, Jamaica Stock Exchange, my first trade for the year, $10.77 I said. Or $10.77 is how much I bought it for. We're now looking at JSC as a stock at the end of the year that cost $27.86.
So more than double. And it has gone up to at least 40. Well, not at least 40. It has hit 40 something.
It has broken 40, yeah.
Broken 40, yeah. That's the word. That's the term.
Yeah, so 1077. So I'm looking on in terms of
I see myself buying JamT around there at that time too, because of what we were waiting on the whole time, the QWI.
The QWI, yeah, because we were looking at QWI from 2018.
Mm-hmm.
We were talking about before it named QWI.
Yeah. And what happened, remember with I think the annual report and the annual report for last year, for 2018, had mention of QWI, that they were finally moving forward with it into our actual company. Because there had a lot of news around that with KIW, what they want to do with KIW. And then QWI would be the solution to their issues with using KIW as that vehicle.
Exactly, because at one point I believe they wanted to list KIW again. KIW. But I think there was a question about whether or not they'd be able to put it on the junior market legally.
There was a question, the question was no. It was answered no, because they said you can't move off the main and just go on the junior. Because I think that is a rule in the JC rule book. You can't just... Because KIW, for context, was listed previously and delisted in the past. And they couldn't go back and then put it on junior market. They wanted to put it on where... They didn't want to IPO. Mm-hmm. They wanted to slide it on the market. So
list by introduction. Possibly,
and the junior market rules are that you have to actually do an IPO.
There we go. So if you guys don't know what listing by introduction is, check the show notes and you should see something there. If you didn't, I'm so sorry. You have to check Google.
If you didn't, at him on Twitter.
No, don't do that. I can't take the pressure anymore. But yeah, listing by introduction.
Yeah.
Which is one of the ways that you can IPO.
Yeah. Not even IPO,
You want to tell them what that is? I'll tell them what it is. Pretty simple. It means literally what it sounds like. Listing by introduction. It means that if everybody... All right, I'll use the MJE example, although that was not listing by introduction, but it could have been, meaning if you take a known company that has known shares and you take a listed company and the dividend paid out to the people of that listed company is shares in that known company that is not listed. So in this case, we'll say Mayberry Investments, MIL is a listed company, and we'll say MJE is known but not listed. And what happened was that people who owned MIL shares got MJE shares for free, which is part of that money that we told that we made. Because just by owning MIL, we got MJE shares for free. And then I think 1/10
of MJE.
Yeah, the count. Yeah. So if you had 1 million MJE shares, you'd get 100,000 MJE shares. So I didn't have 1 million MIL shares. Let me just be clear, just an example for the people. But yeah, in the event that happened, they could have listed MJE by introduction because enough people would have gotten shares, and it's a company that's enough.
It has enough shareholdership to meet the
requirements.
JC rules with 20% must be listed.
Yeah, exactly. Because what they did, they had paid out 10% of the company. So if they paid out another 10% to other people.
20% are owned by the public, so you must put it out.
So they could have been a listing by introduction. If that wasn't clear for you, check the show notes and you'll see something there.
Well, so we thought something would happen. They tried to list by introduction on junior market. They asked for a waiver, but they were told, nah, just IPO it and you'll be good.
So
that wasn't didn't work out in the plans, I guess, but they finally put into writing QWI. We are doing this, incorporated the company, and it will receive all. So I remember the annual report, and I think it was the final results for the year. Randy saw QWI in the words QWI in the
annual report, yes.
In the annual report, and in the QWI and the intention to do whatever with it was in the annual report. QWI itself was on the unaudited results. They put their subsidiaries, and QWI was there. And they say, yo, that makes sense. Something's going on here. They finally
jump in.
Started buying, annual report confirmed it, started buying some more. And that's why some trades where I bought some QWI, some JamT with expectation that QWI would add value to them. And here we are now.
Here we are now. QWI, did QWI add value to JamT?
Definitely. I was buying JamT at 3 something to 4, and JamT is now at 6 something.
Yeah, people say it's not doing nothing. Right? It's so funny.
Yeah.
I started off with 158% gains on the first buy. Yep. You're starting off with 100 and something.
First buy,
Jesus. It's like we know what we're talking about. Fontana, actually have some Fontana bought also at $3. 15 cents. That was my second buy for the year. Wow. And AMG was my third. Wow. MJE was my fourth. Wow. Salada was my fifth. And
yes,
Salada, yeah, I remember. Salada was a nice, interesting one because Salada almost became my very first loss.
Oh yeah, you wrote it out, no?
Yeah.
I'm not taking this one.
I was like, I'm not taking this one.
It made sense. If you looked at it, there was going to be value created data, so hold it.
Yeah. And Salada, what happened with Salada is that Salada had started to really clean up the operations. Yeah. Tighten up the operations that gotten a whole lot more efficient.
Yeah. And
Damn.
a lot of money came to the bottom line last year and this year.
Yeah. So funny how that works. But then they had the boiler fire.
And they had no sales going on for a while.
Threw me off, boy.
Because something like that. Kind of, we spoke about risks, and the risks, you have to know what risk you can take. You write down everything. I know this.
Know what your mitigation is. Yeah, but there's not me going, just in case they have a fire in their factory and lose at least a month out of the quarter in terms of revenue.
Yeah.
You can't plan for that.
One in, so.
But you can plan for what if this goes to crap. You will never know, the unknown.
Yeah.
And so it worked with the unknown plan, and this is me here buying it at $38. Also have some buys at $39, but I know I've been buying it from 2018. So these 38 buys was me.
I remember.
That was me averaging up.
I know you and Steph were buying Salada, because I used to ask her about Salada specifically, because I know she was good on that stock and she was making some good money on it.
Shout out to Steph. Guys, if you're hearing the noise in the background, it's because we're recording somewhere different. So sorry about that, but the gems are the gems, right? You know what else I have? In February, 138 SL.
More conversations around that too.
Yeah.
We spoke to Ryan, we told him that we're analyzing that stuff.
From long time, yeah. So this was me also. I would have been averaging up maybe or down, I don't know. I bought at $3.91 then. What is 138 SL now? Let me see if I'm still upside down on that. I don't remember. I remember being upside down at one point, and upside down is a nice term that means that we'll be in a loss position. And that was me buying it in February for $3.91, almost at the end of February. And it is currently listed for $4.02. Yeah, and I'm actually still personally in a loss position with that one.
Okay.
I'm at 0.5. How it go? Negative 0.5%, a 0.5% loss technically. Yeah, and I include fees in my buy price. Yeah. So 138 SL is fine, but then I have a different plan than 138 SL. And it was all, it's all those things that I tell you. Well, personally, some things get bought so that you remember to pay attention to them. Yeah, 138 SL is one of those. So now at the end of the year, I'm technically breaking even with 138 SL. Yeah. But my plan is a little longer.
Yeah.
As you guys would have heard if you listened to the Ryan episode, you'd understand what's up with that. Yeah, but that's good. Funny enough, what's funny to me is that how quickly we can cover the January. People think that we buy every day and we're in front of the computer buying and selling.
Because they speak about thought short term, they start thinking, they're day traders.
Yeah.
So everybody asks me, you can day trade the market?
Yeah.
I'm like, I'm not day trading.
Yeah, and we've never said that either.
I'm not really.
Yeah. Sometimes we get some nice short, some nice short
market
jumps
in the morning and say, that can happen. But most times that's not my plan.
What actually happens a lot with me, or you know too, is that we make a plan for something to happen and we're buying for it to happen. It's not our fault if it happens early.
Yeah, exactly.
if we're buying for 25% growth and we get the 25% in a week instead of 3 months, it's not my fault. I didn't tell you guys.
The market, information. So if everybody else is saying, wait, that thing is there, and we saw it before them, we had a 3 month, we thought in 3 months' time they'll see it too, and they see it within a week. Then we just made that money in a week.
Yeah, it's not our fault. Okay.
Yeah, so that was a good Q1.
It was a good Q1. But Q1 not done. Anything happened in March? Interesting.
March.
I was buying a lot of Seprod, I see.
Oh, yes.
At the end of February.
I did go into Seprod.
Yeah.
I think I had some before.
Would have been buying Seprod because we spoke about Seprod from 2018. And there's still plans around Seprod. Yeah, I won't go into those now, but Seprod has been interesting and good. And funny enough, I think I must have exited Seprod, did I?
No, I did exit. I know I exited at a positive, so money made there.
I exited up also. Seprod is actually one of those examples of something that the stock moving towards my goal percentage earlier than I expected. So I'm waiting for something specific with Seprod. I just haven't actually seen it yet. I'm incorrect. I do have separate in here. I just don't have it on my dashboard for some reason. I wasn't tracking it. Wow. That's dumb. I didn't have it written in.
So Randy has money he doesn't know about.
Yeah, don't that. No, I don't know about that. Yeah, I'm actually up pretty nicely on separate. Wow. 19.7% after fees.
Why I'm happy I exited where I exited because so it went up to even 70 this year.
Yeah.
So I was buying 30s, 40s, exit.
Yeah, that's what happened. This buy I'm looking at is $36.50.
Yeah. So I exited because my outlook on where the money was coming.
Sorry, I'm pausing to show our independent person that I'm not lying. So people know that I'm not lying about these things. $36.50. What's that date, ma'am? You can shout it. Shout it so the microphone hears you.
Is that November or February?
That's February.
No, February 11th.
There we go. $36.50.
But yeah,
I bought it heavily up to $47.50 actually. Wow.
I was looking at it and I was like, all right, so the restructuring with the whole sugar, the consolidation of certain portfolios, they're going to start losing some money. So I said, all right, just leave. And when them down, I come back in and walk right back up with them.
Yeah, that's true. When did they do the Facey buy?
The Facey buy was during November. So it wasn't during November. So they did they got the Facey on the books. They had the Facey transfer, they send the money to Facey. Facey offered some shares to the market.
When did they do that?
So that was in November last year. And so I got some at 23, I think. Some separate shares went to the market, and it was a good time to get because separate doesn't have much shares out, but getting at that price, good company.
That was in October 2018.
So I got in at that time too.
That's a good time to have
made some money, so I exited.
Yeah, because you remember what it was sold for? You remember what they made a big deal about selling it for? It was $23.99.
Yeah, so almost 24.
Yeah, currently separate is going for
40 odd, 50 odd.
How much?
40 plus, 50 plus.
That's a good guess. $49.44. $49.44. And you could get it at $23.99.
Yeah.
Wow.
So you doubled.
Okay. $49.44, and we had bought they had sold at $23.99 for their share sale. So right now you'd be looking on 106% on top of your initial money. Yeah, that means if you put a bills in, you now have $206.10.
Yeah.
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 That's pretty good. All right. Let me not spend too long on Q1. Jump to Q2.
Q2.
What did you do nice in Q2?
Q2, my first thought is Wigton.
The market changed in Q2.
Yeah, man. People were complaining. They were wondering, can Wigton take my money? But me and Randy were fully saying, hey, we can send a lot of money to this thing.
But liquidity, guys. Liquidity for the first time. That's when you hear our strategies start to kind of change. I personally stopped chasing those, something that I mentioned earlier. Stop chasing the big percentage numbers and start dialing in on what the cash kick out is, which is one of the changes they have to do when you're moving from Tanto to Buffett, you know? And it has been instructive since because it makes a world of difference now in terms of what the actual cash kick out is versus what that nice percentage gain is. You can make some crazy percentages if you below.
So I'm looking at my screen. I'm skilling up.
Humility is a great trait, Danhai.
No, so
don't sound like that
Barita.
Randy fellow.
I see Barita in my screen where I bought some Barita.
BIL?
Yeah, around $40, 44, 45.
What's that? Is that around the time of that's after rights issue 1?
Yes.
Yeah, because it would have spiked.
And I was looking at it, I was like, and I saw the results had come out, I think. And I was looking and saying, wait. These next results come in, going to be fire.
Yeah, must be.
So
why did you predict what a funny thing to bring up? Why did you predict that the next results would have been good? As their fight, but let the people know.
All right, so we're looking at the ownership of Barita. And I was looking at where the investment gains would come from. So I think in the audited, they mentioned that the investments that Barita have, investment that Barita has,
whatever, people get
so
it.
Go around. Yeah. The investments they own were the unit trust. They had shares in their own unit trust. And but I was just wondering, how do they account for that? But you know, unit trust, the equity unit trust, it's at this price now, it's at a higher price tomorrow based on the basket of things in the unit trust, then they make some money.
Yep.
So I was seeing how they do the unit trust, how they make money. From that, the investments are in the unit trust. So cool. Look at Barrita's top 10 shareholders at the time, I think. If you look at it, you saw that Barrita Unit Trust was there too.
One of the major shareholders of Barrita is the Barrita Unit Trust.
So they had made some gains, and the actual company, you see, they were making stronger gains from their business lines, and the unit trust gains were the investment gains were just killing it for them. So they were doubling, I think, almost doubling on every other thing, and the investment gains was heavy.
And they record. So I don't know if this is so. Remember I mentioned a couple episodes ago a bet that I have. This is all predicated on your assumption that the unit trust changes in the value of the unit trust are sent to the P&L statement for Barrita.
Yeah.
So if that is so, then that would be the reason why the two would be jumping, right?
Yeah.
It is, I believe, again, we could be wrong, but it is also why I think we predicted that the last set of results would not necessarily have been hot because Barrita's share price did not jump as much during that last quarter. Of course, it came out that they had good results, strong results, but it was not as strong.
It's strong, not as strong, but the key part was the price had already caught up to a lot of it. So where is the new gain coming from? If we already, it was priced in.
Yep.
Yeah. So there we are. Made some good money off that, just on that. So Barrita bought some Barrita at the time. As I had gone in heavily on Wigton. The IPO itself could take a lot of my money. I didn't send all my money to the IPO because I was still iffy on where the cutoff point would be. It was higher than I thought it would be, to be honest. I thought I could put it. I thought that if you send, I thought like $1 million would be where people cut off. Turns out it could take a lot more than that. People got in 4 million plus, I think.
Oh, you mean in terms of putting
the IPO itself
into the rights issue?
No, man, not rights issue. So
what are you talking about?
Back on Wigton.
Oh, back to Wigton. Apologies. Yeah, people got a lot of things in there. Yeah, it was pretty big because it also popularized the term bottom up to the Jamaican bottom up allocation. Yeah, because it allowed a lot of people to get it. I mean, Wigton is, in history books, Wigton is going to be a major point when the Jamaican financial landscape changed. Because regular people started making money from it. The people who did kind of free, but there's a lot of ads. It's the first time in our lifetimes, I would say, young people's lifetime, that we see.
I work at Mayberry.
Yeah.
So I saw the people that were coming in. He's the everyday man. This guy never heard about IPO before. He's here. We had campaigns to the government offices. So
public sector workers.
Yeah. So the government really wanted a lot of people that work under them to actually get into this thing and make some money. And it's not just the guy behind the desk, the security guard coming to, everybody was coming to apply to Wigton. Yeah.
And those people, I mean, end of the year, we're looking on Wigton, what's Wigton share price? It's not at 98 cents or something like that, close to 100% growth, and it broke 100% twice for the year. More than two times, I think. Because sometimes during the day it would break.
During the day it would trade, but the actual setting price. So people got more than 100% from trading Wigton. So,
well, it's a hell of a year. Yeah, we can't overemphasize what Wigton did for the market. It truly democratized the market. It moved from the whole heap of money people and the highfalutin talk to the regular man on the ground. And then suddenly, when in popularity come into it, things start to change because now people have to start change. People have to start know the new year had been doing what I've been doing for years, cussing the houses, cussing the market, telling people that they need to fix it up and you need to talk to people in real ways. Q2 was the time for that. We will look back. I can comfortably say that we will look back on Wigton coming to market as a changing point in Jamaica, where like things truly shifted.
And looking at the screen, and I know one of our favorite stocks for this year was where we started. I started buying a lot of that. Signals. So I was getting Signals.
Yes.
15 and under.
And
I was just buying.
Yeah, wow. I never thought about that. Yeah. Signals is when I'm wondering if I made a tweet, but I don't know if it was then. I know I had made a tweet saying that, just explaining Signals. I've done, Signals is so lucky. I've done like 2 or 3 threads for them. Not for them, but about them. I mentioned that they had IPO. Just lay out the story. The IPO, they did and it was, I'm going to fit it in there. It's in June that I made it. No, we're talking about SVL there, not Cygnus. Yeah, but Cygnus, I remember speaking about it and saying plainly that they came in to the market, they did an upsize, meaning they took more money than they initially said, but they had told us that they reserved the option to do that. And then a lot of it got, it's a watered down. I'm realizing the tweet is actually from 2018, November 2018.
Yeah, so
and
if
then
it was just an IPO without upsize, then I would have, as in you look at it, the multiples were strong at that, but the upsize just doubled everything. So you look at it, the PE went up, everything went up to a point where if it was at that point, I would not have invested. I did invest, I got out early. Something I boast about, I show people the chart and I show the volumes at a certain level. And I said, that was me. That was the one trade I got out.
Oh, yeah. A lucky volume. Yeah, and they fell from that. Yeah. The tweet I talked about from November last year was actually me talking about how they were getting hit on the US dollar transfer. Actually, that too, I sit in a couple of companies that, you need to, I was just saying, you need to start concentrating in JMD. You need to put your money in JMD, anything that you can, because some companies can't. That was part of what I was doing back then. I see that's a very popular thing people say no. So I'm happy again ahead of the curve. In November 2018 is when I was talking about that. I should put that tweet in the show notes. But they took a hit in November 2018, and that's when we realized that after a hit, if the company is good, they're going to be perfectly fine. And so said, so done. Cygnus rose back, and we're like, this bad thing is good. Not a gem for the people who may be following us and not understanding when we speak about certain things. Like when it comes to investing, I say, it's a wagonist game. Yeah, nothing is permanently good, nothing is permanently bad. Yeah. I'm here, I will trash it today. And if the results come out tomorrow and the results show potential, I am going right back into it. Yeah, some SRA, my most disappointing stock for the last 5 or 6 years, which I haven't bought, but they just didn't live up to their potential at all. Just me looking on as a fan. They truly ruined themselves. And if they're good tomorrow, or show signs of being good tomorrow.
I'm there, walking and holding the man's.
Yeah, man. That was, it was also the year of SSLVC, when they were supposed to come and they started to act shaky. This is the first time in my life I read an audit report that said, where the auditor did not say that they stand behind these numbers.
And Randy been on this for a while.
That's like, wow.
When I always hear the auditor, whatever. And when I saw it, I was wowed. Because 3 years, and this is the first time I've seen something like this, and this can happen. The auditor them always just,
Yeah, it's always just a go. In fact, I'm on record telling people, you don't have to read the auditor part, just get into the financials, right? And then they taught me that, pull up your socks, you can't say that because not every company is always on board.
Yeah.
And we mentioned them. I mentioned them just now to say that I'm not necessarily giving them a hard time now because I see them revamping. And if I see something good come out of them, I'll be the first person they're buying in. Yeah. This was the year of iCreate also come listing on the market. Young company, Tyrone, big up Tyrone, who has been on the podcast explaining what it is. He's a good example of wagonism on my part, meaning me jumping onto the company when I think it's going to go up. That's what I do in investing. I'm not here for love. I'm here for the money. I love it. And I'm passionate about it. But I'm here for the money. If my mother lists on her company don't look good, I'm not going to be the person going, you have to believe in it. Unless my mother give me a lot of reserve shares. In which case, he should believe in that. But no, you do it as a wagonist. You do it. You need to care about yourself because no one else in this case does. It's your money. Anyway, I said all that to say that I did also buy into iCreate long after when it fell. So around the 70 cent region. But that when it was at $1, I mean, I love the company, I love the idea, but it's not my money. But when it dropped down to 70 cents and I can push my horizon out to a year or two, Tyrone might, as he said on the podcast, that he's looking at various options and regional expansion is one of them. And if that worked faster than we expect, that thing might fly back up to $1. And $1, if you buy at 70 cents, is a nice little bit of gain. If you buy at 70 cents, is more than is not. It's not 30% gain. It's more than 30% gain. Yeah, it's like 42 or 43% that you make.
The upside is always stronger than the downside.
Yes, it is. On the growth. You remember them days when we were joking around with Cable and Wireless? Cable and Wireless jumped between.
Funny because I didn't get the joke at first.
You got it on the wrong side. But it's a good. It was a good lesson to learn. So Q2 was the quarter of Wigton. Q3.
Made a lot of money there. Q3. So I'm buying signals heavily, all the way up to $15 something. Then I see some more Barita buys, so some attempts. I bought some more Barita, bought some more signals. This is in Q3. Bought some more Wigton. I see Wigton got some Wigton around 79, 80. I was buying it up. Some more signals too. Oh, I was buying quite a lot.
Hear the money, man.
Yeah.
I see myself buying a lot of JSC.
I got some
No,
Jam
that's
T
still
too.
that's still Q2 for me.
I got some Jam T too.
Q1 actually. You
Yeah,
seen some
so-
Jam T?
Got some Jam T.
Oh yeah, but then boy, Jam T would have been being impressive all year in my view.
Yeah, but the price started moving, and then remember they had a lot of Connected Party sales that was pushing it down.
That's when QWI was about to list. Like Q3 or Q4?
This is Q3.
Okay.
No, so I'm wrong. Yes, it's Q3. It's after 6. Yeah.
What month we're looking
This
at?
is I'm looking at 7th month. So July, I was buying some Jam Tea. I bought some Jam Tea around $5. Blue Power.
Well, before you even go Blue Power, we talk about a lot about what we bought. I'll say something that we don't talk about a lot. Our sales. I exited Berger heavily during Q2. Still Q2. But I exited Berger heavily during Q2 at around the $19 level. Of course, I'd have been buying from early, the single digits and then the 10. Well, 5 Sole again, big up 5 Sole who beat all of us because he's been buying it from the $3 and $4 level. Yeah. But I bought late single digits and early double digits, 10 and so on. So exiting at 19, I didn't mind. I was doing that in Q2.
Yeah.
I look at it now because I don't think Berger is anywhere past that. Berger is probably like 17 or something like that.
I don't think it's doing too hot right now. Need to work out some things.
Yeah.
But yeah, Blue Power. But Blue Power buying Blue Power at 6 because I remember it was available $4 something for a good while. Announcements hit and people said, no, I'm not selling that at $4 anymore. And it was shaky to get to that 6. Because I remember there was a heavy trade one day. I had sold a lot of things. I had a lot of money on the account. It was 100 and something. A good amount of shares were in the queue. And I remember I had just bought at 6. It was the enough shares was 440 shares was at 6. And I sent you the screenshot. I put in the group. By the time I go, the person withdrew the share. The sale.
I wonder if it was me.
No, it wasn't you.
It wasn't me.
Because we both wanted it.
I probably went to buy it. I didn't go on to.
And then go in and put the trade on the same trade. I never. So, day trader, you see it pending, refresh.
Yeah.
And it's to see a bot. You said no, you see
Pending.
it's queued.
Ah,
I was like, oh, so I never get the shares.
Oops. And JTrader, one thing that Danhai mentioned on JTrader was earlier, but one of the great things about JTrader is that it's really fast. So sometimes by the time you put in the order and you go back to check the status, it already filled. Once it's there, it fills immediately. JTrader was a very key tool, especially this year. I see myself still buying Cygnus. Boy, I bought Cygnus all year. I'm gonna sell it. I'm gonna sell it my buy it back.
Yeah.
I'm sell it my buy it back. It's such a good stock.
Yeah.
It's such a goddamn good stock.
It's a good company, like the
Strong
the
company.
amount of things they're doing. You look at the thing, you look at the company, it's lean. It's a fund. So Cygnus Capital Management, they got a bag of money from the market and put it into this thing that has no employees. They just do administrative services to them and they charge them a small fee for it. So all the money we invest, it doesn't go through a large line of employees. We pay for this building, we pay for light bill. No, we just have a bag of money here. We pay this small fee on it and then we just invest the money, put the money out to other companies and then collect our loan payments or equity payments, whatever. So there's not much in the way of the money you get back from them. So good money.
And that
Lean
setup
company.
forces them to do that dividend. So
Yeah, definitely.
dividends will always be
Because
nice there.
Yeah, there were a lot of cash sitting down. We're not going to invest it. We'll give it to the shareholders. Make them feel nice.
Yeah, this is the year that I had to start paying attention to dividends. Not because I care about them greatly, but just
Because it actually...
it just throws
actual
itself
money.
in there. Yeah.
So Cygnus, I got a good dividend from Cygnus. And this is the first time I can actually feel like I got a dividend.
Yeah.
It
I
can
don't-
actually buy something.
Yeah. I don't know if.
We say laugh and say party money, not even a box lunch.
Yeah. And then
Cygnus,
this year.
I was like, wait, whoa, what's up?
Yeah, I spoke about, I don't know if it's Q3 or Q4, it's Q4. I don't know if it was edited out of the podcast. If not, I guess I said it. If you didn't say it, then you hear it. No, I did mention that the Cygnus dividend allowed me to fly for, it didn't allow me, as It was enough for me to fly first class back to Jamaica. That's a nice dividend. And of course, what I like
So
is that
I don't know plane. I don't travel often. So, but this dividend, I told you the dividend one side.
yeah, well, I know how much you
I know
hold. So I know how much you hold. So I know, yeah. It's a nice dividend, yeah. Carry money. Bossy and done. Humility is a good trait. You need to hold that humility. Of course, I'm joking. I don't think you're humble. I hate that I have to say that, but I know it'll be repeated in the wrong way. Guys, I do not think Danhai is not humble. He's actually very humble.
Yeah,
and trust me, because I know people who have less money than he's moving around and them go on hype like a ratted.
Oh gosh, I know that joke.
Oh God. A few of those jokes. Anyway, funny enough, I see myself selling Barita a lot in Q3.
What price?
I see sales at 78,
Oh yes,
95, 70,
Well, look on this now. At the start of
75.
Q3, I was still buying at 45.
Yeah. And I was selling in Q3 at 78, 70. So on. I see myself selling some jam tea actually at $4.40.
You sold it at $4.40? Mm-hmm. Oh, you're not a believer.
No, I'm a believer, but I'm also an opportunist. This was in July. What else happened in July that I should never forget because it involves me also? The lab, I think, listed in July. Yeah. Standout quarter for me in terms of everything. The lab, obviously.
Yeah.
Big up Kimala, big up the lab. So that was a quarter of the closest I've been to an IPO in terms of seeing it top to bottom, from the belly up, the inside. I understand it completely. I know what happens at the back end. It worked out well for me. It worked out well for me.
Really well.
Really well for me. But you know what it was for me? It was also an opportunity for me to see. Like, you work towards something all the time over the years and you tell yourself, if I ever got the chance to the XYZ, so scrape up every dime, all of the money, fling it in. Went well. And no, it's still a huge holding of mine, obviously, but it's not the only one because again, you don't stop, yeah, you never stop. Bolt never break the record one time, and then just done. You break the record, you break it, then you have to set it again, show them boys and I say it work. I know, you use the stepping stones that you get. It worked out well for me. And from that, boy, I looking at the J Trader and seeing just more and more and more. I did sell a lot of that. I did sell a lot of jam tea. The salada we mentioned earlier, salada got back to in the 30 zone, and I see myself selling. I have some salada I see selling at 35. Like I was like, I can't take no losses. I can't take no L's on this, boy. Jump out. But that's done because I think they've managed a lot of what they have now. They still have that coffee issue, the cess to handle. But my entire strategy around it has changed now, and I don't have to worry about a loss on it. So it works great. Blue Power, you're right. I was on the wrong tab. I'm going through now. With some heavy Blue Power buys happened because we would have. Why were we buying it then?
Because we knew the Gumbo, the first
they had mentioned it in their financials. Yes. So we knew, and we already know we see what happens whenever Mayberry sets up a company well to reorganize itself. And we did all this before we ever knew about the palm oil stuff.
Yeah.
Which is more Q4, the palm oil with them not being able to get the same discounts on their foreign market. 20% of the revenue, they say. Which is funny. Well, I can jump into Q4 a little bit and jump back out. Q4. What was your response to that?
I have a funny thing for Q3. We're not done Q3.
Go ahead, sir.
Separate sales. I saw some separate there. Was selling Blue Paw. I think so. I got the Blue Paw. Price rise, and I wanted the Gumbo shares. So when I was vested as a shareholder, and I would be a shareholder on record date, I would exit it at a high price. So I bought around $6 and sold around $13.99. I've seen, and so some heavy prices. Yeah,
and still get the share for free. That unfair.
Buying something more signals buys at that time.
So how did you know to do this? Because that's what the people listening want to hear. Tell them that. They want to know how they know to do it. They just want to know what we did. They want to know why we did it. So why did you do that? How did you know to do that at that date? Yeah,
so on the record, so we have a T+2 system in
Jamaica, which means that transaction day.
Yeah, generally, the T+2 is mostly worldwide. Most of the markets use 2+2. So the transaction day plus 2 days after. Any transaction you do, it wouldn't be on record as yet. So if I'm a shareholder today, I sell today, then tomorrow on record, I'm still a shareholder. The day after, I'm still a shareholder. The day after that, then I'm not a shareholder anymore.
There we go.
So there's a settlement period.
So the trick is that it then allows him to sell. On the record date,
And
get the money, and still get the benefit of having
being-
been a shareholder. So he got the free shares anyway.
shares,
It worked out so well. I held more still. I didn't sell back then.
Yeah,
I sold more. I sold out the last of it. That's what I was going to say in Q4. I sold out the last of mine. As soon as the palm news came out.
Yeah,
Not that I
that.
expected that it was going to be crappy for them. Actually, I have great expectations of Blue Power, you know those. But I expected that the market response might be strong.
Yes.
So I jumped out of that thing at $6 something.
Yeah.
I see it now either floundering at $5 something or whatever. Again, Wagonist guys, I love it. I love the game, but I don't love any company other than the ones that I own fully in the moment when I own them. And yes, I jumped out at my profit. And if it dropped too low, I'll buy back in. That's how you do this thing. When you're hungry, when you have little money, you have to work harder.
But there, the joke was X Fund.
Oh, Jesus.
Oh, yeah. So I bought some X Fund on a mistake.
What were you trying to buy instead?
So, no. The mistake, I wanted to buy X Fund, but the mistake, I remember I messaged you. I said, wait. Yeah. So the X Fund had recently restructured the company and the way they recognize the Playa shares. So Playa shares they're below 20% ownership total, right? So they were recently tracking it. The gains from it would be on the stock price movement. Playa been going down because they have a lot of problems. So X Fund was showing a lot of losses from them, some $1 billion losses, right? So when I saw that they do the restructure, cool. I checked Playa itself's numbers and I saw that, hey, Playa is bringing in heavy money. Cool.
Playa being the US company that has
The hotels that
hotels
X-Fund
all
sold
over.
to them. Cool.
That Sagicor sold into them and then bought
Yeah, so
part of
X-Fund
it.
got some good money in that quarter. This quarter now, Sagicor's results came out. And I saw where Sagicor was showing X-Fund not X-Fund, they said the gains from Playa were X amount. Gains from their associates was X amount. I was looking in the 6 months tab and not the 3 months tab. So the 6 months were already all information. I was tired. I was dead. Yeah. So the 6 months tab was showing the quarter before plus this quarter. I was like, wait, man, money make time for buy X Fund. And the 3 months was showing that whenever you make so much money still out for this thing. Cool, but I was looking at it wrongly, so I thought this is more money on top of the money they made from them already. Bought X Fund. It's a good thing. The market was agreeing with me. About around $10 something. It gone up to $12, $13, and I sold. I was shortly after I caught the mistake. Show Randy. So I don't think you bought in because you caught the mistake before. But
X Fund?
X Fund.
I may have bought in, you know. I say I buy here for X Fund for I won't say how many units, but I bought at $12.
But it went above that because the speculation. I think a lot of people are still expecting X Fund to do.
I didn't exit. Did I exit at a loss? I don't know if I exited at a loss, but it wasn't a big buy. It was and that's no excuse. I lost a loss, but I bought it with the intention of the money. I had a specific plan behind the money. I was like, X Fund for a part, and I would have put the buy in, and then by the time you'd have realized, I was like, we don't have to do a heavier buy. I pulled it off, and you know what? I put the money back in as always. Signals. I bought that throughout the year. My God, I bought that up to $22, $22.75.
Yeah, I was buying, and I was buying when it was 21 plus. Yeah. So I want a lot of signals still.
Yeah.
And because of what I know is coming for this company.
Yeah. Because they're so obvious. Not obvious in a good way, meaning they only ever go for money when they have something to do with the money. Yeah.
Because the upsides itself from the IPO time, when the upsides offer, because we have this strong deal line and we don't have enough money for it from this IPO.
Exactly. And we profited because we realized that they do something with the money. They fell because they had bad results. But after the heavy drop, we went right back in and bought it.
The type of loss they took for the results. They bought some currency.
The heavy FX loss,
and the price they bought it at was lower than it ended. It was higher than it ended the quarter.
Yeah.
So basically, they have to put a loss there, and because it's so much money they bought, then they take a loss. But in reality,
on a cash position.
But in reality, how much money? That's funny. But the amount of money they actually had was. The money coming in wasn't changing.
Exactly.
It was going up. Money here was changing it.
It was growing.
It was growing.
Every time they do an investment, the money that comes in grows.
Yeah.
Which means you can almost guarantee quarter and quarter is almost going to be good.
So what they're doing next what they're talking about next year with the $35 million
2020.
The money cost should be coming in. With they're planning to do 15 million from loans, 20 million from rights issue. They're working that out. But if you look at it, we have double the amount of money so they have 39 mil capital. We're taking in almost the same amount.
Again,
because
so
we have so much things to do with it.
Yeah. So it's almost like the IPO situation again, but this time, instead of being overvalued in air quotes, they're now actually undervalued.
Yeah, so that's crazy to me. So,
wow.
What a time
to be alive. What a time to be a Signal shareholder. I went and did a thread about it and the price spiked, but thanks to Kalila for that. Big up Kalila. I'm sure she's listening to this because we do help. We kind of do the same exact thing that she has started doing, which is to help make investing simpler for people. Yeah. So yeah, I know she listens to this and she gets a lot of data from it to ask her questions and the stuff. I love that. I love that the space is developing. This was the year that the space developed. I can't jump past Q3 because this was the year that I started doing Grow. And that was a quarter I started doing Grow. It feels like so long that it look like, matter of fact, we started this podcast in Q3. Yeah, in August. We started, it feels like a year, but no.
Wow.
Yeah, we started this podcast in August. So shout out to that. Shout out to Bam again for helping us put this whole thing together. And we have gotten a thunderous response from the people. We're really happy about it. The people listening now, thank you. If it's your first time, welcome. Listen to some of the old episodes. If you think, what we don't know what I'm talking about, here's my promise to you. Literally stick with it. Literally stick with it with one. Although it's not a stick with it kind of podcast. You don't need to. It should be good every episode, and it is. But if you listen, one episode is great. Go back and listen to another episode and say, yo, these guys actually know what they're talking about, and we're making it relatable. We want you to understand. So we're never going to be talking heavy finance.
Yep.
Meaning not that we don't know it and we do it for ourselves, but there's literally no need to make something more complex than it is. It is. Yeah. I think it was Einstein. Einstein said something about simplicity. Things should be made as simple as possible or something like that, but no more than it needs to be. Yeah. And of course, as Einstein supposedly also said, if you can't explain it simply, you don't understand it well enough. So people who need to hear a complex answer for a simple question, I can't rate that. Complexity for complexity's sake is just for watches.
You know, when I think when I speak to somebody like that, and you say something and then they repeat it like in the more advanced way, as if to say you should have answered in that way. My head is, I go on so you understood what I said, but so what's the reason you need to be said to you that way? You understood, so
you need to use these terms, bro. You need to use these terms. You need to use these terms, bro. It's not right if you're not using the terms. You don't know what you're talking about.
So it's not finance if you don't say it like that.
Yeah, exactly, right? It's just making money.
Yeah.
Which is funny because the guys who come up with the terms didn't have terms for it. They had methods that they use.
And the guy's like, so that guy was doing that thing and we're reading to explain to us, I guess.
Yeah. Bring it back to Buffett. Buffett popularized, he didn't invent, but he popularized DCF, discounted cash flow.
And he wasn't saying anything that way. It's weird. Because
you know what else he did? He modified it. And I'm sure if he had, he's Buffett, so he carry a heavy amount of respect. But a regular guy down the road tell you, say, modify DCF and do it a certain way. Man, might say, yo, no, that don't work. And I saw it going out of the book. But he modified it for his own purposes. And he explained why he modified it. I am comparing against this because this is where I can put my money. Because he's being Buffett. To him, he needs to think about where he can put billions of US dollars. And so he compares against that. He modified it for himself and now people worship it. I think maybe when he did it, people would not have done it, but he's been around for so long, he has that heavy amount of respect. Say that to anybody listening that, yo, if you have something that you found has worked for you, and like you're right, it worked, but I don't understand other people are doing it. So let me test it, and you test it again, and you keep working, and you keep testing it, and you keep working, even though it's not the way that it's typically done. You believe in yourself. People always say it can't work until it suddenly works, and then they turn on and praise you for it.
Yeah.
I use the example all the time. I'm a fan of design and architecture. And you know the house Falling Water.
No.
you need to get on that Wikipedia game, bro. So Falling Water is a house that was designed by Frank Lloyd Wright, who's a legendary architect. What a lot of people don't know is that Frank Lloyd Wright, I could be wrong, I'm sure I'm going to hear it in my DMs if I am, is actually not a trained architect. He taught himself. And no architects worship him. Yeah. And he uses things that compression and release. He uses different things that are typical things. But you wouldn't think that you're a great architect, you're making a great house, and you're going to put the entryway for this amazing multi-million-dollar house is a tight passage, a little wider than the size of a door. That's entryway to your multi-million-dollar house. But you walk into that tight passage and you go up a small stair and you come up into a beautiful, wide, brightly lit place. And he did that just to have that compression effect, and release effect. And I'm sure if he may say, hey guys, I'm going to do this compression release thing. I'm going to make it uncomfortable to come in so that when you step in, it is extremely comfortable. And architects will tell him, you are crazy.
Of course.
Yeah, but no, they worship him. I hope somebody's listening to this 20 years from now and writing it down and say, Randy said. Or...
So those are the Randy says you want.
Well, hey, big up Frank Lloyd Wright, although he had a crazy personal life. But hey, big up Frank Lloyd Wright. Yeah, Q3 was fire. Q3 was fire. Q3 was the quarter of the work. Q3 was when I started to actually say, all right, for years I've been trying to bring people into investing, and I have been bringing people into investing. Let me try and put some energy behind it. I told you guys it would be very personal. I'll be more honest in this. Q3 was when I say, yo, is either going to stop talking to people or going to put a price tag on talking to people, because I know what I'm saying is working, and the only way I'm going to keep doing this headache is if people pay to do it. And of course, I like to put myself in a box where I have to either succeed or stop. So, nice price tag. It does cost $85 to come to grow, 85 USCS, and then I have to ensure that there's 85 US worth of value there, at least, at minimum. And of course, I run off my mouth too much, and not everyone is happy with me running off my mouth. So you know, if I get it wrong, they're going to be on my neck. So that put that pressure on me that it has to be right. It has to be great. People that come have to have a great experience. They have to be good. And of course, my personal thing is, if you don't like it, I'm refunding you money immediately off top, because I believe in the customer care that I want for myself should be extended to everybody. So it's been working. Thanks for that. You guys will hear a lot more next year from it. But yeah, it's been the quarter of it. Podcast.
I think Q3 is the quarter I started talking. I don't think I was really speaking. I don't think I was speaking about investments.
Well, people listen to the podcast say that you don't speak at all. So
and this is speaking Danhai. So imagine before I wasn't talking about investments on Twitter. My Twitter was just for the jokes.
Yeah, crap. You tried to trade that.
It
for
was
the money.
always private conversation. I never really. I don't really want to put myself out there like that to be. Oh, I'm the guy for investment. I just want to make some money. I want this to work for me, but I think Randy kind of showed me that from before. Randy he's very charitable, you know. So
yeah, that's the problem.
He's been speaking more than he should. He really wants people to get it. Like
I want people to get into it.
Yeah, he puts himself out there a lot, like to his detriment a lot of times. Like he going through explaining the same thing 30 times, and I'm like, yo, why are you doing this? But yeah, so I guess that's where he showed me like it can actually it's better for everybody if everybody's into it.
Yeah, the more people in, the more people understand, the better it is for everybody. Truly.
Better for Jamaica, better for Jamaican citizens, better for the world. So yeah, Q3 was my speaking time. So I guess I'll try to speak more still. I haven't heard that complaint too much anymore. So
yeah, no, everybody happy that you're talking.
Yeah.
Yeah, I'm happy for that. And what else happened in Q3? Some nice stuff would have happened. Q3 ended September. So between did it end in September? I'm saying the wrong thing. No, it's right. July, August, September. So we'd have had lab listing. Would have had select. Wow.
Oh yes,
the first listed fund. First listed. What do you call it?
Listed equity fund, but it's an attempt at a traditional, what do you call it now?
Index fund.
Index fund, yeah.
Yeah, passive index fund.
Passive index fund. Index funds are usually ETFs type things. Or
somebody's actively seeking
the price.
profit. Yeah, and the NAV is the price, and somebody's actively seeking to make profit.
Depends type of index fund.
Yeah, they're different types. So this is like a passive index fund.
Passive index fund, where you just buy the stocks and make them do them thing. But it's not the NAV is the price. There's a difference between the trading price and the NAV. And people, they hope to get the NAV from trading.
And the results of the company do not necessarily reflect any importance for the actual share price in terms of how the market has chosen to look at it, which I'm not against in the case of Select F. But yeah, it's the first time we saw it happen. And then we see Q4.
We've been speaking about it for a while. We've been considered maybe do it ourselves.
Yeah. Well, technically everybody does do that themselves, right? Yeah.
Make the passive index fund that buys the main market or buys the sector of the main market. We're thinking of maybe do it ourselves. Yeah. And probably try to sell it to the wider public. But somebody do it before us.
Yeah. Somebody with a lot more money. Somebody with a lot more money named Sajid.
Oh, yeah. So And there's no harm in that. It's something
No,
we
it's
want
good.
for the market.
Of course,
done.
it's great.
Yeah.
It's great. It's great. It's great. People learn this is the year of the IPO poppers. This is when people truly came in, and people learn that you can't just get it. It's not magic.
Eventually, you do the same thing, but if you do the same thing and there's no reason behind it of more than it's an IPO, you don't know about the company, you don't understand the company, and you also buy an IPO, then you're going to learn that lesson that you don't really work so.
Yeah, in fact, QWI came out in Q4, September.
Okay, so in Q4 now. Q4?
No. Sorry, Q3, end of Q3, September.
End of Q3,
Yeah, so the poppers would have been in that because by this point they would have made money off Wigton, they would have made money off Lab, they would have made some money off Select F, but it went up, some got in, some got out, and then it went down, and people, if I'm but about it. And then the next one would have been QWI, which sent Jamaica Teas up also, crazily, because it had a discount involved if you were a Jamaica Teas owner.
I think that's when I think I did the same thing I did for Blue Paw with Jam Tea. I started selling out of the position at a higher price.
In order to
be on record at whatever date.
Because I had the same sort of thing. Yeah. And as long as you're a shareholder by XYZ date, then you'll be good.
Shareholder pool.
Yeah. Funny enough, unlike with Blue Power, I have not jumped out of Jam Teas.
Because there's more money coming to Jam Teas. So.
Yeah, well, we're looking at them. I'm looking at them financial statements that were released recently, fresh off
audited.
the press. Yeah. And sorry, I have to switch over from the Barry to audited. We can talk about that off air or in another episode. We're looking at the Jam Tea numbers, and I mean, strong is an understatement.
Oh yeah.
Yeah, we're looking on
profits
for the year being more than double. 483.1 million Jamaican dollars versus last year where it was 193.3
that's heavy
million Jamaican dollars. So I didn't say the million at the first part, it was implied. So that means that these guys have put on top of their initial performance, meaning their 2018 performance, they've now in 2019 put 150% on top of it.
Yeah.
It's not a joke thing. Big up man like John Jackson. I know that's a dangerous thing to say these days, but I still rate him. Yeah, he had a rough year. He had a rough year. He really did have a rough year. He tried for a long time with to get QWI out there, Jam Tea, and in one fell swoop, even a hard time. But again, rough is in air quotes because look at this company.
Yeah.
Who he's involved
in. Strong
company. And part of that strength comes from QWI. Yeah. Some people tell you that these gains aren't real. Because it does include.
The thing is, all right, so what I find funny, I've tweeted this before. So we're on this market, right? We buy stocks. And we're buying stocks for the purpose of the stocks making us money. When we sell them, we buy more stocks for those stocks to make us money. So if you can buy a company that does it with somebody with a team with more experience than you, like most of the people I hear, I know they have more experience than them, right? Cool. So the company does it. The company is making money. They've done it. This release result, the company has made money on the stocks they bought. So what's the issue? If you're doing the same thing the company is doing, and the company is way more successful than you, do you really have a point of saying that it shouldn't be done, it's not real money? That don't make no sense to me. And actual cash will be paid out from QWI to Jam Tea.
Ooh, don't say that to them. 1.2% of the average monthly. Yes, I'm working from memory, so the number might be wrong, but 1.2% of the average monthly value. In other words, the average monthly NAV of QWI is paid over to Jam Tea as an annual fee.
Yeah.
Yo. That means that man them lock themselves into a 1.2% dividend every year, no matter what. Plus them own shares, so the dividend also hit them.
So the actual dividend comes over.
Money on top of money.
Yeah. So to me,
yes, I have not sold my Jam Tea.
To me, I know it. I thought that don't make sense. It's more than one time we see companies that own an asset. The asset goes in value. That's profit.
There we go.
We own something and it's worth more tomorrow. And the difference here. So you on real estate, the building is worth more now. Cool. Stocks are way more liquid than the building. Yeah. So like right now, I say you can't tear off your garage door and sell it if something happens, but you can tear off 10% of your stocks and sell it if something happens. And they've proven that they can do it. So they have done it. I'm sure. aggressive fund. They actually want money. They actually want to seek opportunities, sell, buy, that type of thing. Money being made. So
Wow. But
stocks are very close to cash.
very, very close. Yeah.
So-
Cash and cash equivalent, as they say.
Yeah, I don't think it's cash equivalent.
No, well, I mean, it is considered cash or cash equivalent, EPS. But
Cash
the
and cash
EPS,
equivalent. It's not cash equivalent. No.
It's not counted as
Stocks?
cash and cash
I don't
equivalent.
think, no.
No, true. They are listed because I saw in Lab numbers, which are public, that Lab does own a nice amount, a little less than million worth of QWI, and they do not necessarily have it under cash and cash equivalents. Yeah, but in real terms,
They're very close to cash. Because
very
you can-
close to cash. You
as
can
long
turn
as
it into
liquidity
cash
is there,
very
you
quickly.
can convert it
Yeah.
easily. One day
Yeah,
sale.
yeah. Well, I'm sure the guy. Well, you see, that's why you don't know what you're talking about, Randy, because you should have known that that's not cash or cash equivalent. Guys, I'm not an accountant either.
I mean, I've seen some of these guys make accounting mistakes. I just haven't called them out.
Yeah. I mean, what's the point? What's the point? It's always a learning
Oh
opportunity.
yeah, definitely. That's the
Yeah,
issue. So
it's always a learning opportunity. And not everybody
that's why I'm
takes
not
it that
calling
way.
out, and I don't want to make it to be a point where you're attacking somebody.
And people take it that
doesn't
way.
help you, and you don't help them. So
Yeah, and people
what's
take
the
it that
point of
way.
Yeah, so I don't shut up.
Me too. It's sad, but it's true. I did the very same thing. It's just, but the important thing that people need to take from this is that stocks are very close to cash, and you can turn them into cash if you have an issue. Yeah. So a quick wrap up. So much I feel like we missed, but I'm sure we'll get into it because we'll have another chance to talk, and we have a little thing coming that I think some people will enjoy. A lot of people I think will enjoy, some more than others. But what do you think for next year? What are you excited about for next year?
Excited about for next year. All right. I'm not going to say Trans Jamaica.
Yeah. Oh, not just stocks, but generally. Well, I'll start. Because I always pressure you. Let me start. This year, one of the greatest things I'm looking forward to is to put like actual tests, my keystone theory. Yeah. Just how to work it for the market. Because I know there's money there, and I've seen that there's money to be made doing it. But I want to truly work on my keystone theory. People don't know what keystone theory is. Listen back to the old episodes. I mentioned it at some point.
The one with Kwame.
Yeah, the Kwame episode. I was trying to make it a riddle for them. So, but that's cool. That's fine. In the Kwame episode, I do mention in somewhere in there, you hear me talk about doing the same thing with like a keystone sort of strategy. So listen to that. And it's a strategy I know works, but I want to perfect it in 2020. Listings I'm excited about. Boy, I'm not going to do typical stuff because I don't care until I see the numbers. But what would I like to see? I passed Bert's earlier. I feel like I'm looking at a hot girl and she just don't want me at all. Bert's, listener, please. The man them have a new building, the thing set up right, taxi not stop.
And big up JMB, a listed company that financed that. It's out by the front.
JMB is responsible for that. Big up
Responsibility.
Team JMB.
Yeah.
As we mentioned, Kwame, it happened. Big up Kerry.
We have some good people over there. Big up Kerry.
Yeah, big up Kerry. Enough maximum respect to Kerry. Shout out to
Definitely.
Kerry for showing a professional way to handle
Yeah, man.
client dissent, right? Because I will be honest, I have given JMB a rough time over the years, deservedly so. I'm never a bad man or anything. I mean, I've owned JMB shares. I'm a JMB shareholder currently. They had a great APO. We should have mentioned that.
Oh,
They
yes.
raised a crap load of money this year. A lot of raising
And the
happened
price
this
up
year.
since then, so.
Yeah, and it has priced up significantly since then. And it's 38 and then 40 something dollars now. So if that's all you bought, you're already making money. Look at that. It's the year of people making money. I like that. Well, big up JMB for handling a vocal disgruntled client, and I'm talking about myself, very, very well. Coming in and being upfront and saying, yeah, we have issues. We're not trying to hide it. We're not trying to silence you. This is what we're trying to do. We know this is good. We know this is bad. We're trying to work it out. We're trying to fix it. End result, we've had 2 good episodes with them. I'd like to have Kerry back on. I've told her, Kerry, actually, guys, you don't know, Kerry has a whole heap of history in the industry because she's been in the industry for long enough. So she has a lot of experience. So I want to have an episode this year with her on it where she can just share a lot of how she's seen it transform. Because
I mean, you guys love Kerry. Trust me.
yeah, and people do love, yeah. And Kerry is I have, like, Danhai knows because we talk off here. Every time I think we talk about her, I really respect her because she's so good at what she does, and people don't know. She's very subtle. That's how you know somebody's good, when they don't have to shout it. So shout out to JMB for that, and shout out to Kerry herself. So that was my thing. Danhai, you can tell us how excited.
More money.
Excited. More money,
Yeah,
of
I
course.
plan to make more gains next year.
Yeah?
I want to beat my return number this year. I don't think I'll be tweeting in the same way because if I beat my salary this year, it's not going to be much hard. It's going to be much easier for me to beat the salary next year, getting a good return on that salary, on that money. So I'm not sure that I'll be making that tweet.
Yeah, and
almost
there's-
feels pointless. But so plan to make a good amount of money from the market. Plan to probably do more stuff related to the market. But
I'll make more
That's
money
what-
than he made this year.
definitely. So I'm really looking forward to that one. I see a lot of opportunities on the market, a lot of companies where come into a lot of money next year. So work with that. Yeah.
I like that. And the opportunity to help, not just through grow, but a lot of charity, a lot of young people, a lot of the youth that will never
definitely.
know nothing about it. That is what I love.
Yeah. So Randy's more charitable than I am. But no, definitely. But I see myself now more. I used to speak about stocks. I used to just randomly in the office, me and whoever that. But I get more now. I'm more now willing to speak to people who don't know a lot. Not that they're willing to listen, because I know how that goes sometimes. Yeah. So I'm willing to speak to more people, which is why I'm on this podcast, about stocks and getting into investing in general. It doesn't have to be stocks. There's a lot of investment.
Exactly.
Makes sense.
A question that we get
makes
asked a
sense
lot.
for your goals, then do it.
Everything. It's not just stocks. But that's what we like now. But if tomorrow stocks start being hot and bonds start being
bonds
great,
start-
we're gonna be
best
talking
believe.
about them bonds.
Yeah.
Them bonds. If bonds start being hot and chicken patties is the hottest thing, I'm
guess
buying
what,
them
patty
chicken
shop?
patties. Yeah. Oh wow, don't say patty shop. No, I don't want this nobody. I'm gonna wrap it there because I know we have given you guys a nice one, and Bam has been very, 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 very kind to us this year. Big up Bam. This
Big
year
up
for
Bam.
helping us. Yeah.
Bam give us a platform to
Yeah,
reach
if you
you
thought
guys.
this year was good, next year is going to be the year of
Definitely.
professional
Earning
perfection.
season all year, guys.
Yeah. Look out, 52 episodes. I hope we can make it. Not promising, but I'm hoping.
Yeah.
One a week. Let's go. Thank you guys. Thank you for a good year. We're not signing off the year, or maybe we are. Who knows? I don't know when we'll drop this. But thank you very much from me. I'm at RT Euro,
All right, thank you guys. I'm Danhai at Danhai. Bless up.
and this has been earnings season. Boom.
All right, cool.